The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time, Monday morning, coming into the opening bell in 24 minutes, and we have markets slightly in the red this morning, but when you look at things compared to where we were on Thursday, where we were at the end of day Thursday, folks, you basically just been chopping around at that price range. You traded from $37.50 up to $4,000 at the close of action on Friday, and we've just backed off. I mean, check it out, though. Sunday night, we opened at this level. We've been at that level. Pretty interesting. You have Biden meeting with Xi. That meeting concluding, 3-hour meeting. They put out their announcements of their take on everything. I think we're going to get a Biden press conference probably in the next few minutes. Don't expect that really to move anything, but probably good nonetheless that they're talking, because that's always a good thing in general. S&Ps were minus by 10. Let's jump over to crypto. So CZ is out there tweeting that let's jump over to this one, because this one's an interesting one. Folks, if you're in crypto, you have anything in anything. And I got a few different headlines here. Where's the headline that I'm talking about? Yeah, a recovery fund. That's what I wanted to get here. And so getting down to, oh, come on, show me the tweet. We have too much action. Okay, I'll pull it up. Nonetheless, it's a recovery fund, folks. We're going to talk about it after the first break, because this stuff is wild. There are just headlines everywhere, and there's your acceleration from 15,300 to almost 17,000. Okay? Now, the reason why I bring it up is we were just trading at about 17,000. You make it to a low of about 18,000 on July 1st. Folks, things are much worse right now than they were on July 1st. The contagion that could rip through this market, man, in an unregulated market that is so commingled across the board. We're going to jump to crypto.com. If you have money there, let's do it. Why not? Why tease it when we can just go there? And this one is quite the headline. Recovers $400 million after misplaced Ether transfer. Okay? That's more than 80% of the exchange Ether pile. First of all, they're just sending $400 million accidentally to somebody that they didn't mean to, okay? Then you have the fact that it's 80% of their Ether. Then you have the fact that they haven't commented if those funds were part of client funds. Now, they say that client funds, okay, crypto.com, and who really knows the truth, folks? That's what's going on. But I read this article this morning, okay? They sent $7 million to a woman in Melbourne last year where the account number was accidentally entered into a payment field. It took them 7 months to get that back. Now, they say in here, okay, that client funds are in cold wallets. Yes, here we go. Perfect. Crypto.com's website says all of its users' funds are held in cold storage, while so-called hot wallet usage is solely for corporate assets. A hot wallet, folks, is connected to the internet. Okay, a cold wallet, which probably is the safest way to store it, okay, is off the internet. Maybe it's a USB drive, right? Maybe you wrap it in tinfoil to make sure nobody can get in it with your tinfoil hat and all of that stuff. But that's what they say. That would be the safe thing to do. I saw hedge fund reports over the weekend that hedge funds in crypto, right, had X amount of dollars on FTX. What are you doing, man? If you have that type of money, there's no way that you should not be holding all of that. Yes, it's easier to trade it. That's probably what they were doing. But boy, talk about an unnecessary risk that's a complete wipeout if it happens to come to fruition. So they say that all the users, but the spokesperson declined to clarify whether user funds were involved in the transfer. If they're involved in the transfer, then that means they're not held in cold storage. Think about that. Okay, and that's crypto.com, one of the biggest ones out there in a big way as well. You look at the numbers that they were doing, okay, they were doing $4 billion, I think, of daily trading revenue. I'm going to jump around to this one in terms of how this thing can take a hit. Maybe it was over here in this article. Yes, here it is. The exchange's daily volume has collapsed from this is crypto.com now, keeping track of all the players, but this is another big one. They're saying they're fine. Okay, and in one article I read, they said that they have $10 million exposure. Are you kidding me, man? Okay. Last year's daily volume was $4 billion. They're now pushing $284 million. Yeah. What is that? 5%, 8%, 7%, whatever it is of their daily volume, a 93% decrease. Be careful out there. If I had any money at all, I'd be trying as fast as I could, and I'm not the only one, man, because what do the headlines see? Yeah, sparks billions of dollars of outflows from exchanges. Folks, there's no reason to wait. If you have any money out there in an exchange, just get it off some of these sites. They might be okay. But guess what? If they're okay, let the dominoes fall and put the money back on there if you really need the action to be there with that type of ease on exchange. But you're seeing what's happening, man. So $3.7 billion in Bitcoin, $2.5 billion in Ether, $2 billion in stable coins taken off exchanges. Yeah, I would not be surprised, folks. Now, the story comes out. And look how many articles I have pulled up for crypto, which is it's important though, man. Is this the one on the top? Let me scroll up a bit. Yeah, so Binance announced to plan a crypto recovery fund. Okay? Now here's the thing, folks. He didn't have the money to step in because we're talking about billions of dollars. Who's going to get the recovery fund when you're talking about wiping out $200 billion in crypto market value already? That's lost value because of this collapse of one of the biggest exchanges in the world. There's no making a fund, man. Bitcoin at 16,000 right now off the lows on that is very discouraging for where things could go in the future because you're not going to have investors prop up some kind of recovery fund in dramatic fashion when the dominoes are still falling, folks. That's kind of the point here, you know? So let that sort where it is, but interesting. I woke up this morning, I took a look at Bitcoin, and yeah, I saw it trading up more than $1,000 from where it was at about 1 in the morning. And that's quite a pop in relative nature to where we are. I mean, think about it, man. We were chopping around at 20,000 for the period of 4 or 5 months. And things just changed dramatically. And all we've done is tick down from about 19,000 to 16,000. That doesn't seem like that's a fair market value for everything going on. All right, let's jump around to some of the other markets right now. We'll jump to crude. Crude down about down about $1 or 1% to 87.89. You jump over to the gold contract. We got some action in the dollar this morning. You talk about moves last week. Gold up to 17.75. Right now it's 17.66. Silver up 8 pennies at 21.74. And we jump to notes and bonds, a little bit of lower price, but pretty much chopping around right where we were towards the close of last week. You got the 10-year down by 6 ticks. And we're talking about a 10-year yield right now, 3.87%. The yield on the 10-year. And we jump over to the volatility index, the VIX right now. Quite a dive lower from Thursday to Friday's action of 22.37. And we only have the market down 11 points, folks. I mean, that does not look like it should be an elevated VIX. Look at how little volatility, right? We had a 10-point range, 15-point range overnight. But meanwhile, we get the VIX pricing in some action, man. As you opened anywhere, you didn't even trade. Look at pre-market. We were pushing above 24, and right now we're basically above anything we were at on Thursday and Friday. So it looks like the market saying, hey, we had the party Thursday, we had the party Friday, we march on. We got some earnings this week. We're going to get some Fed speak. The vice chair, Leo Brainerd, I think she's talking at about 11:30 this morning. We have another governor talking this evening. And yeah, you know, be careful. All these exchanges start crumbling, man. There's nothing to say they can't. We'll find out who's in order. Don't think it can't happen, folks. Stay tuned. We'll be coming back. We'll be talking a little bit of S&Ps and earnings. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps down by 13 points right now, trading at 39.87. Keep in mind, folks, the context of where we are versus where we were, 250 points higher. You're about 10, 12 points off of the highs. Nothing. Basically chopping around at the highest levels of the week, which was last Friday pre-market. And just look at the volatility we had on Friday, man. Dwarf what we did on Thursday. But you're talking about a trading range, folks, where we went from 39.85, down 30 points, up 30 points, down 30 points, and then up 55 points to end the session. Remarkable moves. That's the type of volatility of a market that's a little unsure where it should be. We got one data point for Thursday. It was a big one. The core CPI is what the Fed is going to care about. They're caring about that. They're caring about the PCE, the personal consumption expenditure. That is the biggest of all. But they like the core number. All right. Chairman Powell has said that they don't have as much influence when it comes to food and energy. So they're looking for the core number because that's where they can have influence. Now, I'm adding the fact that, of course, that matters, and I think they would recognize it as well. But, boy, I don't think we want the Fed pushing numbers that they can't control. I mean, that's part of the argument of those that say they shouldn't be hiking because this is a different factor, and the hikes that they're having are not going to have the impact that they hope. And maybe that'll be what drives us into a recession and isn't necessary. That is that argument. Whether it's true, we're going to see it play out, but we got one data point on Thursday. It was a big one. We go forward from there. We still have companies with earnings. And Morgan Stanley's Wilson, so he gets a lot of press, man, but he's been all over it. Recently, he was ranked the number 1 in the latest institutional survey. So he's looking at consensus estimates for 2023, still much too high. And that's always the interesting part. When you look at multiples, right, you make the case that multiples were bonkers going into the beginning of 2022. They've reset to more reasonable levels on the current earnings. But we've seen it happen, man, with companies missing earnings in a big way. I mean, Disney just had quite the demise on their numbers and weak guidance going forward, collapsing from 101.97 down to 86. They claw back a lot of that with the market demise. But one example of many right now of companies coming out and not the year they want to tell us about next year. His base case for U.S. company profits to decline 11%. That's the base, not best, not worse. That's the base case, 11%, before a strong rebound in 2024 as positive operating leverage returns. And here's the key, folks, all right? I mean, that's only a year out. You know, you talk about 2023, and his number in here that he's looking for is basically finishing 2023 where we are right now. but volatility. And I would agree, man, no matter where you think this market's going, I think there's going to be some volatility, folks, because every data point's so important. I mean, that last data point we got, the market's hoping it's now a turning point. Well, guess what? The next data point, it now has the expectations of market hope that that data point was a turning point. We've had similar situations before. When was CPI supposed to top out? What was it, like February it was supposed to top out, and then we got some bigger numbers throughout the year as things really persisted, okay? But his words here, volatile path to get to his 2023 year end of 3,900, which is just about where we are, 2% below where the gauge closed on Friday. He expects the stocks to fall as earnings estimates come down. That's the bear case, folks, okay? That's it. We're at some pretty reasonable levels right now for the earnings they have, but if things miss, man, this market is staying short term. Even though we're going to turn around in 2024, you could see the pullback for those earnings. The path forward is much more uncertain than a year ago and likely to bring several twists and days, weeks of remorse for investors regretting they traded it differently. That was a note put out today. In the short term, he sees a stock market rebound sparked by last week's good inflation data running for a few more weeks. Get in while the getting is good, I guess, a few more weeks. And yeah, looking at the S&P 500 to forward earnings per share, this one's caught my eye a couple times. It's not the first time I've seen this chart, man. And if you're looking at this chart, okay, you don't normally probably see this type of a pullback without seeing any budging in the line in the red when look at the correlation over time, folks. Okay, now that correlation existed during a time of free money, which has been cut, so maybe the earnings don't need to dive as drastically. But nonetheless, you look at that chart, you look at the forward earnings per share, the revisions, not quite there in terms of where they may go, and he's looking for a potentially 11% decline. And that pushes you out basically to where we are right now, at about 3,900 to 4,000 in the S&Ps. All right, I can't stay away from crypto, folks. Can't do it. If you want more reasons to worry, okay, it just speaks to how unregulated, how crazy everything is in there. This article just found this one during the break, okay? FTX users appear to be cashing out of bankrupt crypto exchange through a Bahamas loophole. So according to regulations, they have to facilitate, I guess, withdrawals in the Bahamas as being based there. Let me get the number where they say. Yeah, we had the... All right, I'll find the exact quote to pull it up. But nonetheless, the way it works is that they're buying NFTs for ridiculous sums of money, and then somehow people are cashing out. So imagine if you're an FTX user, the point being, right? You're still getting screwed, man. You know, instead of there being any money there because it's some crazy FTX Bahama-based crypto exchange, they're processing money, and the richest people out there are doing it. You had an NFT that was traded at $9 3 weeks ago, just sold for $10 million, man. Okay, and they're buying NFTs, and then they're making deals with Bahama citizens to cash it out. Seems like a no-brainer, right? They're already filed for bankruptcy, and this stuff's happening, all right? That's a Saturday article out there, folks. Anyway, be careful. We'll probably talk some more crypto, man, because I had so much in terms of what was pulled up pre-market. Pretty remarkable. But you know what? Let's go to some China. Yeah, why not? Because President Biden met with President Xi today, 3 hours. Biden may be speaking right now, maybe he is, but nonetheless, this one's an interesting one. So China plans a property rescue in the latest surprise policy shift, 16 policy measures to support the sector, and the plans dovetail with Xi's recalibrated stance on COVID-0. So China catching a bid, man. The Hang Seng was up huge overnight. I think it finished the session up about 2%. What do I have? Up 1.7%. That number. Yeah, and you know what's interesting? I can't get away from crypto, okay? And this is how prevalent it is. I'm up about 6 in the morning every day with Tommy. He gets up 5:30, 6 in the morning. Sometimes he's an early riser. He's an early man in sleep as well. But so I'm looking at everything, and the common theme of how pervasive every single crypto article story was across every single thing, because, yeah, China, they got a huge acceleration going on right now. The Hang Seng was up almost 2% after being up even more than that. You have a huge rescue coming in for the property sector. And in that, Okay, let me see if I can find this. Because in that, yeah, some of the companies, shares of Chinese property developers listed in Hong Kong surged 29%. Country Garden was up 32. Sci-Fi Holdings was up 29. Logan Group was up 38. Longfor Group was up 22%. These are the companies that are in real estate in that sector in China. So that is a huge surge. You have them possibly shifting from COVID zero as a pretty dramatic shift out there. But then what do you have? You have SoftBank over there. They were down 14%, folks. SoftBank. Okay? So don't think that somehow SoftBank is going to trade down 14%. And a company like Crypto.com has $10 million of exposure. Not possible. It's a wake up. If I had any money on there, just put it in some cold storage, man. Figure it out. Go watch a YouTube video. Maybe I'll do some research myself and figure it out, because that is the way, as they would say, cold storage. At least right now, until those dominoes fall. Stay tuned, folks. We're coming back for the open. S&P's down by 15.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the markets open, and you're looking at an S&P right now, negative by 17 points, trading at 39.83, pretty much where we've been chopping around a little bit on the lower boundary line, 39.83 right now on the S&Ps. Yeah, there we go. NASDAQ down about 83 points, 11,767 to get the Dow right now off 71. We jump around to commodities, crude, 87.70 right now. We jump around to the dollar index. How about the move on the dollar last week? Slight reprieve, but I'd say the same thing that I say about the market, right? We're up a little bit, but we just traded from 111 to 106. So, yeah, you're back to 107 right now at 107.06. I mean, how about the yen, man? Right? How about the gold contract? Great time to try out the gold report. My dad's newsletter, folks. He comes out with a new issue every Monday morning. Looks like gold finally catching a bid. And the yen correlated to that for sure. And you talk about decisive break, man. From 151 and change down to 139, yeah, even below, right? 138.46, I got a low. And if you look at this channel line in the yen, well-defined top of that channel, that's for sure, man. You touch that thing over and over for a period of about 7 months, from basically March or April until November, where we were on those highs. On the lower side, you know, from where we started, the lows that you pull back to in August, pretty tight channel line on there, and we just slammed through that channel line at 140. Now, you could come back, maybe test that, about 143 range. That would also be the area that the yen was trading at in September of that area. Still, 143. You were just shopping around at near 150 in the yen, yet above, let alone above 145 for the better part of more than a month in the yen. Now you jump over to the euro. We got decisive breaks all over the place, right? Check that out. You talk about testing the channel line. Very well-defined channel line on both sides of it, the upper boundary, the lower boundary. You break out of that channel line in October, you come back and you test it 10 days ago, and boom, you slam higher, man. So much for parity. You just have the euro trade from 97 to 103. Yeah, just remarkable, man. And we'll jump over to the pound. Now, the pound was not as clear of a channel in terms of the break with everything going on with their new prime minister. You got back within it, but even within that channel line, you just traded out of it as you get the pound at 117, and it was trading at lows at about 107. There was talk of the pound going to parity at one point on the pound US dollar. We got the S&P's negative by 10. Dow actually sneaks into the positive. Now, it was interesting. Dow, you know, didn't quite have the day on Friday that the other indices had. It definitely had the day on Thursday, but looking at the numbers on the Dow, I actually was looking at some stuff over the weekend, and I not did a double take, but I think the NASDAQ was up 200 on Friday. The S&P was up about 39 or 40, and the Dow was up like 35 points. Said nothing? Nothing. Well, the Dow, it was just in the positive. Nonetheless, you see well off where it was, 33,982, and that was early Friday. You never got back up to that level. So it would make sense, right? The Dow is going to be a little bit of a laggard if you get the type of difference in inflation, which will cause a difference in terms of the Fed going forward, their hiking pattern, and its impact on growth stocks. Getting back to the Wilson article, because an important one I want to bring up, didn't get to the end of it. I talked about that he's seeing maybe 3,900 towards the end of 2023. He's talking about a lot of volatility. He's talking about a trough between 3,000 and 3,300. This guy's the number one guy out there. He's been on spot on. You can disagree with him, but you better believe there's a possibility that that number comes in. And if the market trades down 25% from where it's at right now, maybe that is going to be the fear level that puts things in. He's looking for that number in the first quarter, okay? Now, what I do is I take, and the reason why I like bringing these up is because as a technician, I'm looking at the levels, but I'm also looking at the fundamental aspect of things and how they tie in. And I at least want to try and understand how somebody is coming to that conclusion of the market being at 3,000 to 3,300. He makes the case of an earnings revision to the tune of about 11% to the downside. Not out of realm, okay? And he's been pretty spot on. So that has to come into things, at least recently, too, because recently things have been a little bit different, to say the least. He recommends investors stay defensively positioned from a sector and style standpoint until the estimates reflect the bust. After upgrading staples, the strategists are overweight on that sector, as well as healthcare, utilities, and defensively oriented energy stocks. And yeah, you got differences out there, man. And of course, you know, they cite another strategist from JP Morgan, but nonetheless, 3,000 to 3,300, and you're talking about ending the year 2023 at about 3,900, right where we are. Now, that's not bad, but at a time of fixed income, folks, now the 10 years at about 3.87, something like that. But you're talking about still some pretty decent interest rates. As I say that, let's jump around to where they are right now. Take a quick look at the yield curve. Yeah, so we got the 10-year right now at 3.87, but look at the short end of the curve, man. The 6-month, 4.6%, man. The 1-year, 4.65, the 2-year, 4.4, and the 3-month, 90-day, 4.8%. 2%, we'll call it 420. Why not the 3-month? Decent yields, right? The 1 year, you're pushing 4.65%. Is it worth the risk? And this is what is a headwind for the market, right? The 1 year's getting 4.65%, man. Is it worth the volatility risk of going down to 3,000 just to get back to where you are by the end of 2023? And that's just one case, okay? But it's a possible case, to say the least. And that is what is going to be a headwind while you have those types of rates. Even though on the inversion side, yeah, it's pointing to some problems in the economy. And the Fed is hoping that's the case to some degree, but see if they can thread that needle, as they say. All right, what else do we have up? Let's talk a little bit of Elon Musk. Why not? Let's jump over to Tesla shares, see how they're opening today. Tesla shares down 2.6%. They drop a bit. So just the irony of playing both sides and how things go. So SpaceX just bought a big ad campaign on Twitter for Starlink. It becomes interesting when you have one company, right, feeding the other company. And the reason why I bring it up is because SpaceX and Starlink were recently in the news with the Ukraine. And while Elon should not be responsible for providing satellite coverage in a war or whatever you want to call it going on in the Ukraine or our quest or our role over there, but one of the things I heard most often from people who defended Elon and his ability to say it's time for you guys to pay us for that satellite coverage was that SpaceX is a company that has investors, and it's not up to Elon just because he's the richest person in the world to support something like that without demanding to get paid. Listen, there's nothing wrong with getting paid, all right? But one of the things I found ironic about this argument of saying that, they have investors, okay, so you can't just ask Elon because it's bigger than Elon. Well, guess what, folks? All right, SpaceX has investors, and he's over here using SpaceX money to provide revenue for Twitter. And I don't imagine the same people who are usually Elon defenders are going to be having a problem to the same degree talking about how is he using company funds from one company where investors in SpaceX should no way be responsible for his ventures of purchasing Twitter for $44 billion. But nonetheless, they got what's known as a takeover on Twitter. It's one of the biggest ad campaigns they offer, and it usually costs about $250,000 or more for brands advertising on the social media platform. Nonetheless, it's important to keep that in mind as Elon is constantly out there. And, we'll see how that Twitter saga plays out. Markets staying pretty calm. You get the Dow actually leading things as opposed to trailing on Friday. We get the S&P's negative 11, a little bit of a pullback from what we were doing Thursday and Friday right now, but calm market. We'll talk about some of the earnings we got coming up this week, folks, when we get back. Stay tuned. I'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get some action all over the place right now. Crude right now sitting at 87.72. I was jumping around to some of the FANG stocks. You have the NASDAQ 100 down about 100 points, okay? But Amazon, talk about a give back off 2.2%. You jump over to Microsoft, 2.5%. Look at that open on Microsoft. We jump over to Apple, off a full percent for Apple. We jump over to Google, off more than a full percent for Google right now. Let's see how some of the chip stocks, NVIDIA, off 1.3% right now. AMD actually positive. They got a little bit of a lift. Maybe something's going on there with AMD up 2%. Now we jump to some of the companies with earnings. So we got retail earnings this week in a big way. Now, before we get into the number, I had some pretty cool statistics I was checking out in terms of the numbers that we have. And this is according to a Yahoo Finance article. In terms of the beats and the numbers, so far, I believe it's 91% of the S&P is out with their numbers. Let me pull it up, excuse me. Come on, I just had it here. What are you doing to me? Here we go. As of Friday, 91% of companies in the S&P 500 have reported third quarter earnings. 69% reporting earnings per share above the mean estimate. Okay, but usually the 5-year average for beating is 77. Talk about beating low expectations and setting the bar low, right? Under promise and over deliver. 77% usually are beating. Right now we're at 69%, but the companies whose results came in better than the market thought saw an average increase in their stock price of about 2.4% 2 days before the earnings through 2 days after, which is a lot more. It's meaningfully higher than the 5-year average price increase of 0.9% for companies. Nonetheless, decent numbers, right? 91% of the companies out so far, 69% of them beating. The 5-year average is 77%, but usually over that 5-year average, when you beat, you're up about 1% over 4 days. Well, right now, for those companies beating, you're up 2.4%. Counter argument to that, to give you it all as it goes through the head, is that, well, we just got a lift on Thursday of 10% in a lot of equities, and that's probably carrying the whole weight, even though it's not potentially earnings related, although it's kind of all earnings related, right? When you think about the costs of the dollar that are impacted by yields, by rising rates, et cetera. Okay, jumping down to the companies, they're out with their numbers. We'll kick it off tomorrow with two of the biggest ones, man. So we got Home Depot and Lowe's. Excuse me. Let's do it again. We get the two big ones tomorrow, Home Depot and Walmart, okay, on Tuesday. And then we get the two slightly smaller companies that are their competitors, Lowe's and Target, on Wednesday. So we'll start with those four, okay? Home Depot, we're off by about 0.5% right now. We put this thing on a 3-year weekly. You see the pullback, right? From the COVID lows up to the highs of 420. We chop around right at the 50%, which was that same area right here. But Home Depot obviously facing some headwinds with a tough real estate sector right now with rates at 7+%. They're out with their numbers. We jump over to the Analyze tab. Looking at about a $15 move priced in for their earnings. Okay, if you're not familiar, folks, it's the market maker expected move. It's priced on Home Depot when anytime factored into the options premium that tells it that there's an event coming up, and that's the volatility premium that's priced in for that event taking place, in this case, earnings. So about a 5% move for Home Depot with their numbers on Tuesday. Walmart, you're looking at about a $7 move. So pretty similar, about 5% for Walmart. We take a look at Walmart shares. Pretty decent rise so far for Walmart from the lows of May. We're sitting at 142. You heard the note from Wilson, right? Staples, 160 was the high. Walmart at 143, $7 move for Walmart priced into their numbers. Then we jump to the two smallers. We'll jump to Lowe's. So Lowe's sitting at about 208. This thing pulls back to the 382. It accelerates higher. We jump over to the Analyze tab. About a 6.5% move for Lowe's, $12, and they are out with their numbers on Wednesday. And then you jump to Target. Target, there's some volatility. I was looking at this earlier. Target, $15 on a $172 stock. The reason why? Yeah, you've seen some volatility on Target, much more so than some of the other equities, right? You just saw the chart of Walmart. Walmart pulled back to the 382. Where did Target pull back to? The 618. Yeah. Pretty dramatic. So Target looking at about a $15 move priced in. $15 to the downside brings you back kind of just to last week's low, and $15 to the upside. And you're talking about breaking through the 50%. That would get you about 190 to the upside for Target. You see the volatility on some of their numbers, man. 2 quarters ago was when this thing dropped out of the sky from over 220 to 160. And that's a weekly. We'll put it back on the daily, really, to see that drop. You had a gap from 210 to about 160. So, yeah. That's quite a gap. What was that low back there? About 184. You're talking about the lows from February before it got, talk about getting ahead of itself, right? February, it's at 185. And you get all the way up to 254 in April before almost getting cut in half. Look at the pop it's getting, though, up to 173. Excuse me. Okay, some of the other companies out. So we talked about Home Depot, we talked about Walmart, Lowe's, and Target. We also get Advanced Auto Parts out with their numbers on Tuesday, AAP. Yeah, that looks like a pretty well-defined channel line to the downside, man. I'll put the drawing on it, but you almost don't even have to, right? Look at how those tops line up, man. Look at how these bottoms line up. And it's always a little bit of a tough case when you're pushing the top of that trend coming into earnings. You could break out, you could pull back. Nonetheless, Advanced Auto Parts, they're out with their numbers on Wednesday. I talked about NVIDIA. They're out with their numbers on Wednesday as well. That's quite a chart. All the way back to about 109 from 346. You're catching a little bit of a lift. Yeah, this thing has some volatility for their numbers, about $13.50 for a $159 stock. They're out with their numbers Wednesday. The other companies we get on Wednesday, let's take a look. TJ Maxx, Victoria's Secret. Like I said, a big week of retail. Interesting. We got about 91% of the S&P 500 out. Check out TJ Maxx, resurgent, up to the top of the highs almost from coming into this year. Yeah, low volatility for TJ Maxx. Less than a 5% move priced in as they come out with their numbers. Victoria's Secret, this thing's had some volatility as well. Yeah, down to 26, back to 44. About a 5 or 6% move. Is that going to reset? Maybe they're not. It's telling me November 30th up here, but I have them pulled up as well that they're out with their numbers on Wednesday. Let's check it out. Yeah, Williams-Sonoma, they're out with their numbers on Wednesday. Is that Wednesday? They're saying the 17th. Wednesday or Thursday. Got a couple conflicting reports. But look at that pullback from 223 down to 134. See, we get a ton of numbers, man. Yeah, what else do we have? Okay, and on Thursday, we get BJ's, we get Kohl's. Let's pull up Kohl's. I was in Kohl's this weekend, man. Kohl's is a good store, folks. Doesn't mean they're going to be able to make money. They're a good store because I like so much stuff, and they got it on the cheap. Great toy section, great kids section. I was buying a couple toys, bought Tommy a talking, walking Mickey Mouse singing Hot Diggity Dog. That's what I bought him, along with a truck this weekend when we were in Kohl's together. They do have a lot, but check out the chart, man. I think about this every time I go in there. I got some Kohl's bucks. I got some Kohl's bucks somewhere right here. I got 15 Kohl's bucks, and I got to go back and spend them in a period of 7-9 days, something like that, really saving up maybe some Black Friday deals for the holiday. But nonetheless, Kohl's, they'll be out with their numbers on Thursday. And yeah, that's a tough chart, man. What do you say about that chart, right? Maybe you're building a consolidation for their numbers, but you talk about breaking out of the consolidation from higher price. You're at $30. You're right where you were just chopping around in June of 2020, folks, which is remarkable. You jump over to the Analyze tab. Decent move for a $30 stock, $2.34 for Kohl's, as they'll be out with their numbers. I think we got a break. Yes, we do. I hear that music. Stay tuned, folks. We'll finish up. I'm going to take a look when we get back. Foot Locker, they're out with their numbers on Friday this week. We'll take a look at Ross Stores as well. Stay tuned. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of Foot Locker up here, and boy, you talk about a symmetrical reversal. You go from $17 up to 66 in a one-way march, and pretty much go in a pretty similar march from 66 right back down to 25. You're trading at 32.84. So Foot Lockers get their numbers on Friday, and there's some volatility for you, folks. $3.79 for a $32 stock. You look at the trades. Okay, if you want action just through Friday, talking about $4. Not a bad premium. That's where maybe you want to understand options, folks, because it can give you a lot of insight in terms of what the market is pricing in for possible moves, especially around to something like earnings. If you hold that equity, are you comfortable with a $4 move in one way or another? Because that's what the market is saying may happen just for this week's implied volatility as they come out with their numbers on Friday. And we got Ross Stores on Thursday. We'll finish it up. ROST is their number. About a $6.70 move for the weekly options. You're looking at about $7.40, a $95 stock. And yeah, pretty similar, right? In terms of you march higher to 134, you pull back almost to the COVID lows. They've rebounded nicely. We'll see if that holds, man. I mean, what's going to happen in the holiday quarters? Some of these retail stocks. You saw what happened with Amazon. If Amazon's seeing a decrease in revenue and missing by like $10 to $15 billion, it's got to be hurting these stocks in the same way. So we'll see what happens. But keep that in mind as you look at Raw stores up from 70 to 100, right? You look at, Target's not a good case because they already got punished recently. But even Target's up from 140 to 173. Walmart surging from 120 to 142. What other stocks did I talk about? Macy's is out with their numbers on Thursday. Yeah, that's a tough chart for you. A 100% pullback from the run it had last year. Some tough charts in retail as you go into some pretty big numbers this week for the retail sector, along with Home Depot and Lowe's. They're going to face some headwinds as well. Could be a tough one, man. You think about it, housing, right? They're not going to be providing any huge impact, I imagine, to the earnings lift going forward with where rates are and retail. We've seen what happened with Amazon. Pretty calm market to kick things off with the S&P right now down by 16, where we basically started the whole show. And as the market calms down, the VIX 23.31. Stay tuned, folks. Live programming all day. Basil Chapman's coming up next. Have a great Monday, everybody.